Okay, let's get underway and welcome to today's event, the Gulf-ASEAN Economic Corridor, Emerging Opportunities and Future Growth. I'm Michael Lawrence, the Chief Executive of Asia House, and it's our pleasure to be convening today's discussion in partnership with Gulf Capital. Thank you all for being with us today. Commercial and trading ties between ASEAN and the Gulf have been expanding rapidly over the last few years, and economic interconnectivity will continue to strengthen over the next decade. This is one of the key findings of the Asia House flagship research report, The Middle East Pivot to Asia. That report shows that Gulf's trade with emerging Asia could surpass in value terms its trade with advanced economies by 2028. Such is the speed with which it is growing. Today, we have assembled experts from ASEAN and the Gulf to further explore this trend, to look at what's underpinning it, and to identify sectors which present some of the best investment opportunities in the years ahead. Our distinguished panel of speakers include Thomas Lembong, Director, Consilience Policy Institute, former Minister of Trade and also former Investment Minister of Indonesia. He joins us today from Jakarta. Abdullah Al-Hashmi, Chief Operating Officer, Parks and Zones at DP World UAE. Abdullah joins us from Dubai. Eric Robertson, Global Head of Research and Chief Strategist, Standard Chartered, also joining us today from Dubai. Paul Shavorakal, Co-Founder and Group CEO of ECommerce, who's joining us today from Bangkok. And Richard Dallas, Senior Managing Director, Gulf Capital from Dubai. Thank you all very much for being with us, and we look forward to a lively and informative discussion. In a moment, I'll open that discussion and seek views of our experts. We'll also be inviting you, the audience, to participate a little later in the session. We welcome your comments and your questions, so feel free to engage. But to get us underway, let's hear now from Freddie Neve, Senior Middle East Associate of Asia House and the author of our latest edition of Middle East Pivot to Asia, who will brief us on some of the key findings of the report. Freddie.
Thanks, Michael, and good morning to all of you joining us today, and good evening to those of you tuning in from Asia. I've been asked today to present some of the key findings from our recent Middle East Pivot to Asia report, and in particular, highlight recent trends in Gulf-ASEAN economic relations. Now, our research finds that closer economic and political ties between the Gulf states and emerging Asia represents a significant shift in global trade, and this graph shows why. Gulf trade with emerging Asia is growing rapidly. Indeed, our projections indicate that total trade will expand from $366 billion in 2021 to $578 billion by 2030. And this graph really shows how the gap between the Gulf's trade with advanced economies versus the Gulf's trade with emerging Asia is shrinking. And over the last decade has narrowed from around $191 billion to $107 billion. And crucially, this means that the Gulf's trade with emerging Asia will eventually overtake the Gulf's trade with advanced economies by 2028. Now, just briefly on definitions. By emerging Asia, we are referring to an IMF list of economies that includes the majority of ASEAN, as well as China and India. But now turning to Gulf-ASEAN trade specifically. Now, trade was impacted by COVID-19. It fell from $90 billion to $65 billion, but it has since rebounded to $85 billion in 2021. And indeed, our research points to 2022, seeing several really important developments that will further drive recovery and growth. So pictured here is the signing ceremony of the Comprehensive Economic Partnership Agreement between the UAE and ASEAN's largest economy, Indonesia. The deal removes trade barriers, cuts red tape, and will boost trade. And indeed, our research shows that the UAE is a key partner in this Gulf-ASEAN economic corridor and accounts for around 48% of total trade. Another positive development has been Saudi Arabia and Thailand restoring diplomatic ties after a 3-decade dispute. So pictured here is Thai Prime Minister Prayut Chan-o-cha visiting Riyadh back in January 2022. Now, several deals were announced during this visit in tourism, oil, as well as the resumption of direct flights between Bangkok and Riyadh. Now, Saudi Arabia is the GCC's largest economy, and Thailand is ASEAN's second largest economy. So this is a significant development. Our research also shows that Gulf sovereign wealth funds are increasingly looking eastwards for investment opportunities. Recent notable investments include Abu Dhabi Investment Authority's $400 million pre-IPO investment into Indonesian tech firm Go2. Mubadala last year also invested $350 million to consolidate Singapore's Princeton Digital Group's position as one of Asia's leading data centers. Our research also shows that Gulf sovereign wealth funds are opening new offices in Asia to monitor investments and seek new opportunities, with a recent example being the Qatar Investment Authority establishing a new base in Singapore. So our report has numerous other examples of recent sovereign wealth fund investment into Asia, so I do encourage those joining the call to take a look at that. But now turning to the key sectors driving Gulf-ASEAN economic ties. Now, oil is really important here. Indeed, it underpins the Gulf's trade with ASEAN and accounts for around 43% of the Gulf's total exports to ASEAN. But we are increasingly seeing growth in trade and investment in non-oil sectors as well. So starting with sustainability, we are witnessing increased cooperation in renewables. And the most notable example here perhaps has been the UAE's recent $2 billion investment to build a floating solar power plant in Indonesia. In terms of technology, the Gulf and ASEAN have similar visions for economic modernization, with Gulf investments in digitalisation, fintech, and technology attracting investment from ASEAN. And here we see that Dubai acts as the regional entry point for around 95% of ASEAN startups. Finally, as both regions look to boost their domestic manufacturing and boost their exports, we're also seeing greater investment in ports and logistics. DP World and Indonesia Investment Authority, for example, recently signed a $7.5 billion deal to modernize Indonesian ports. Now, looking forward, we have identified 4 reasons why we expect Gulf-ASEAN trade to grow. Firstly, the economic outlook for both the Gulf and ASEAN is relatively positive, and this is going to encourage mutual trade and investment. Saudi Arabia's economy, for example, grew by 8.7% in 2022, whereas the UAE's economy is expected to grow by 7.6% in 2023. The IMF also projects that ASEAN's 5 largest economies will collectively grow by 5.2% in 2023. Secondly, both regions have young populations. 50% of ASEAN and around 66% of Saudi Arabia is aged under 35. And this really primes both regions' economies for entrepreneurialism, innovation, and growth. Thirdly, Gulf-ASEAN trade will be boosted by ASEAN's growing middle class, which will nearly triple between now and 2030. And finally, Gulf economic diversification is expanding non-oil sectors and thereby trade, whereas broader economic and social reform in the Gulf is attracting business and investment from Asia. So that's the key highlights of our Middle East Pivot to Asia report and some of the key trends that we're seeing emerging from the Gulf-ASEAN economic corridor. Back to you, Michael.
Much to digest there, Tom. To you first. There's some very impressive numbers there, and clearly growth there's an enormous amount of growth. Do you anticipate that to accelerate in the years ahead? And where do you see the opportunities? What's driving all this?
Right. Thank you, Michael. I'd like to focus my initial contribution on a couple of aspects. One, directly relating to the numbers that Freddie just presented, is what I call a trade cycle. Yeah, and essentially, one consequence of the shale revolution in the U.S., of course, is that an increasing percentage of the Middle East's hydrocarbons are heading to Asia, rather than to North America, right? Now, adding to that, the rapidly accelerating green transition in Europe, and we can easily see that a larger and larger percentage of the Gulf states' hydrocarbon exports are going to be heading to Asia, and including to Southeast Asia, right? Now, this gets to what I call the trade cycle, right? As more and more of our currency flows to the Middle East for our hydrocarbon imports, more and more of that has to be recycled back into ASEAN, right? Otherwise, that conveyor belt will slow down pretty quickly, right? And this is really what happened, if I can look back at history briefly, when the US and the Middle East, right, particularly Saudi Arabia, agreed to pay for oil and gas exports from Saudi Arabia and the Middle East to the US in US dollars. They sort of automated the recycling of those export revenues back into the US, right? So that's sort of the conveyor belt where, export revenues, flow into the Middle East and then go back into the US as investment, right? And I think that's the significance of, for example, President Xi Jinping's recent visit to Saudi Arabia, and a less focused result of that visit was the declaration that Saudi Arabia is willing to accept a larger and larger percentage of oil revenues in renminbi, right? So again, that sort of creates what previously was a petrodollar market, where it will create sort of a petro renminbi market, right? Now, we don't have anything like that. We don't have a currency union in ASEAN, right? So we cannot sort of automate that capital recycling, but it's going to become more and more the attention of policymakers that we have to facilitate other ways for that capital recycling to take place, right? So this is a bit of a trade perspective on why I think, as more and more capital flows from ASEAN to the Middle East for hydrocarbon imports, like more of the capital also has to flow back, in order to keep that cycle going. Now, the second thing I want to focus on is, I think one thing that will help a lot in facilitating this capital cycle, this trade cycle, if you will, is I think ASEAN is one of the very few regions in the world to hit what I would call the trifecta, right? So it hits the three critical points. The first one being that we're famously economically vibrant, right? We have some of the highest GDP growth rates in the world, as Freddie also alluded. Number two, we have very good macroeconomic stability because we're so traumatized from the 1997, 1998 Asian financial crisis, that we've become, huge hoarders of hard currency reserves, right? And our entire industrial policy is oriented towards like export revenue and being capital generative economies, right? So I think, in contrast to other economically vibrant but more volatile areas, I think we also enjoy a high degree of macroeconomic stability, right? But the killer app, Michael, I would say, is actually geopolitical, right? And that is that we're a relatively geopolitically neutral region, ASEAN. So other parts of the world are bound to be a bit ideologically fraught or come with a lot of sort of geopolitical baggage. But ASEAN, you will find, is famously neutral. Now, that sometimes makes us the butt of jokes, right? Because we seem to, want to never take a position in many cases. But I think it's actually a serious attraction for investors and for players in trade, tourism, and investment. Yeah.
Interesting. I mean, I do want to explore a little later how China and the relationship between China and ASEAN and China and the rest of the world fits into this equation, but you've hit on it there. Abdullah, if I may come to you, Freddie alluded to the agreement between DP World and Indonesia Sovereign Wealth Fund to modernize ports in Indonesia, $7.5 billion deal. That's a fairly clear indication that DP World sees trade growth, I would imagine, in the region. Is Indonesia the entry point? Is ASEAN where you see a lot of the investment opportunity?
So we are very bullish on ASEAN, and we are very bullish on Indonesia specifically. And just to put things in perspective, we're not stranger to Indonesia. We used to operate Surabaya port back in the day. We are very confident in the Indonesian story, not just because of its large population of around 272 million people, but also due to the government efforts in elevating its manufacturing sector to produce high-value products, and the overall improvement in the social aspect. Elevating the middle class, increasing the household income. So the overall market is extremely attractive for us in Indonesia. We think Indonesia can play a bigger role as well, not just in Indonesia itself, but beyond that. And we see it as a possible entry point for greater geographies as well. Nevertheless, it doesn't mean that we will stop there. We will continue to invest in wherever we see there is a need to put additional infrastructure, additional capacity from a port perspective, or even economic zones as well, to support the economic developments of these countries.
Thanks very much. Paul, if I may come to you, e-commerce is an area that has attracted a huge amount of investment in ASEAN. I think it was the second most funded sector in 2022. And is that where the opportunity lies, in the digital space, in the e-commerce space?
No, absolutely. I think when you look at e-commerce and just 2022, it's going to be growing from 129 billion to over the next basically the 5-7 years are 280 billion. And within that sector, really kind of electronics and fashion is huge. I think that in terms of exports to the Gulf, I think those are some of the biggest categories. But I think when you look at it just Southeast Asia domestically, and really within kind of the ASEAN 6, you can see that in terms of a lot of the manufacturing has shifted from just with some of the kind of the geopolitics that was mentioned earlier. You see a lot of that manufacturing shifting to Southeast Asia, particularly Indonesia, Vietnam, Thailand, and these are for electronics, for fashion. Some of these are our clients as well, the large brands. But the domestic growth, and you see, in terms of the demand for not only for these brands being manufactured locally, but also you have an advantage that you're also benefiting from the exports, right, from the manufacturing shifting. So it makes the entire market really attractive from a kind of foreign direct investor perspective. But when you look at really just kind of the mid to upper class in terms of demographics, right, that's you're seeing a huge shift from kind of the low to middle, shifting to the upper, around 60 million plus in the population in Southeast Asia. That's going to be in the mid and upper, right? And so that's really exciting to see that type of demographic with huge purchasing power, because a lot of people assume that the kind of Southeast Asia is more kind of lower income demographic, but that shift is huge. And that means that as you manufacture the Nikes, the Samsungs and Panasonics, right, locally, that domestic appetite is also as big for those products.
Eric, let me turn to you now. Is Standard Chartered's customers, is that what they're seeing in ASEAN? And also, is this investment, this link, this interconnectivity, a two-way street, or at the moment is it more money going from the Gulf to ASEAN?
It's a two-way street, and I guess I would take a step back in answering that and just provide the following anecdote or narrative, which is that 10 years ago, when people thought about global trade, they thought about emerging market exports to developed market economies, and that was the old model. And if you looked at a breakdown of global trade or of global exports, EM to EM exports were only about 40% of that. Today, EM to EM is about 50%. So even at a time when the IMF and the World Bank are talking about a decline in global trade growth and a decline in global trade volumes, we're actually seeing a pickup in activity in these EM to EM trade corridors. And that's obviously what we're talking about in general terms today. But one of the things that really struck us over the last couple of years is in the aftermath of COVID, in the aftermath of trade tensions, geopolitical tensions, etc., there was an assumption that economic growth in in ASEAN, in the rest of the world, would really struggle if China was not participating. And actually, last year, that wasn't the case. I mean, if we look at the broader GCC or MENA, if we look at ASEAN, we had spectacular growth in 2022 at a time when China was at its worst economically. And what that has led, in our opinion and in our observation with client discussions, is a renewed focus on establishing alternative supply chains, not necessarily replacing, you know, the previous or existing relationships, but as a complement to those. And, you know, for example, UAE trade with Asia in general is a spectacular example of that. And I think there's also an unfortunate habit of people focusing on oil-related or petrochemical-related trade. And while that's significant, if you think about the UAE alone, non-oil foreign trade in 2022 was about $600 billion, which is up about 17 or 18% from the previous year. And a lot of that was with the broader Asia region. And so I think there's an opportunity to not only take advantage of where the growth is in the world, but also to take advantage of the fact that I think some of these trade corridors and trade channels are still largely unappreciated by people outside of these regions. So to answer your question in terms of our client discussions and where people are devoting both capital and, shall we say, intellectual energy, it is on leveraging and taking advantage of these new trade corridors that are very much, you know, EM to EM, GCC to ASEAN, GCC to broader Asia. And hopefully, you know, in an environment like today where we're seeing some economic vulnerability in places like the US, UK, Europe, the resilience of these EM trade corridors becomes that much more profound. And I think that's, for, you know, for us, one of the key takeaways.
Okay, great. Rick, if we can come to you now, give us some specific examples of some deals that have gone through the last couple of years that demonstrate this pickup, especially in terms of non-oil investment between the Gulf and ASEAN.
Be happy to. We start with the proposition that Gulf Capital is basically focused around growth. So unlike perhaps our counterparts in Europe and the United States, we are not focused on debt financing and leverage. We're focused on growing our portfolio companies. So naturally, when you take a look, as I think Freddie was describing in the basic tenets of why these are attractive areas, you look at the demographics, you look at the growth rates compared to the developed economies of the West, and it becomes clear that for the next 5 to 10 years, if you're really looking for economic growth, the emerging markets of the Middle East and Asia are really the places that you want to go. So for us, the natural proposition is to be able to look to those marketplaces on an integrated basis. So when we think about how we want to play that corridor, we think about investments in the GCC that we think we can take to Asia profitably. And we think about investments in Asia that we believe have marketplace acceptance in the GCC area. So just some examples of things that we have done. We're investors and have been for a long time in a water company based here in Dubai. And what it does is it provides clean water. It's water treatment plants. It's the largest provider of desalination plants in the world. And we have gone to Asia in a big way with them. We handle the ports, certain of the ports in Indonesia. We have a chemical processing plant for treatment chemicals in Thailand. We built a 14 concession business in mainland China over a decade, servicing secondary cities, providing them with waste treatment plants. We have taken our fertility centers from the UAE into India today, and we're taking them into Thailand to take advantage of medical tourism, which is an established industry in Thailand. We've done digitalization of business services. So we had a hotel wholesaler that we took into Korea and other parts of Asia to complete network platforms that would drive business into the Middle East. So we really do focus. And we've got some other examples as well that we do, but we think going forward, there are going to be plenty of those opportunities. So we're going to focus in our new fund of thinking about, and for us, this has been a gradual adoption. So we started with our Fund 1, our Fund 2, our Fund 3. We're going on to our Fund 4, and we're going to continue to concentrate on accelerating that because we think the opportunities are accelerating. And as the other speakers have talked about, you have the macroeconomics starting to drive the trade. We have our sovereign wealth funds leading the way. And of course, we're much smaller than the sovereign wealth funds. Our average investments are $50 to $100 million, while our friends at the sovereign wealth funds, and we're Abu Dhabi, Dubai based. So we're sort of embedded in all that fabric of what goes on in our part of the world here. And they're being very helpful in terms of creating cooperative agreements, leading initiatives. So we think that that the entire corridors will accelerate in their development because of all those activities. So we're looking forward to it. We think it's a great accelerator of growth. We don't like single country investments. We like to create regional or international champions to create more return, to create opportunities for liquidity. And we can't think of a better place to head than the ASEAN and Greater China area.
Rick, thanks very much. Tom, I want to come back to you now on something you alluded to earlier, and this is where China fits into this equation. A lot of the growth of trade between the Gulf and ASEAN last year was when China was in lockdown for long periods and the economy was slowing. China's now opened up, but there are considerable geopolitical tensions, shifting of supply chains, which Paul mentioned earlier. Where does China fit into this? Is China opening up underpin even more, greater or faster growth of investment between the Gulf and ASEAN, or is it a competitor? Will it slow it down? Will it distract from it?
So let me start with your latter point first, which is the China reopening story, right? There's no question in my mind that the China reopening is a massive positive for economic growth, growth in trade, tourism investment in the short term, and arguably also in the medium term. Now that might come with a bit of a sting in the tail, because as that reopening accelerates throughout the year, it might also drive up prices of things like jet fuel, diesel, petrol, and the like, and that might reignite inflationary pressures, which would then, for central banks to resume raising rates, something that markets may or may not be ready for, but that's a different story. But I think specifically with respect to the Gulf and ASEAN, I see it as sort of 70% positive and 30% negative, right? I mean, if China reopening drives up prices for jet fuel and diesel and petrol, clearly the Gulf states will benefit, from even bigger hydrocarbon export revenues, which will then feed that sovereign wealth fund investment into ASEAN that Richard was referring to earlier, among other things, plus tourism and the like. Now back to China versus ASEAN, right? The answer, I would say, Michael, is both. We're both competitive, and complementary at the same time, right? So, ASEAN, in some respects, can be a hedge, especially geopolitically, right? Less so, I would say, economically, because we actually are quite integrated into China through the supply chains, through flow of trade, tourism, and investment. But we're also very complementary. China and ASEAN really complement each other. We have, yes, we're competing for many portions of the same pie when it comes to like manufacturing, investment, and the like. But we do have different comparative strengths, right? Like I think over time, we'll be better in things like the obvious ones would be like tropical fruit, right? Tropical fruit, seafood, fishery products, and the like. I don't think China's going to be going in that direction, whereas ASEAN clearly is already strong. And between demographics and climate change and the like, there will probably be a bigger and bigger sector for us, right? So sorry to give less than a completely black and white or straightforward answer, but I would argue that China are complementary, a little bit competitive, but especially on the geopolitical side, I think ASEAN would be a very nice hedge to investors who cannot avoid a sizable amount of China exposure.
Okay, Abdullah, if I come to you, Tom mentioned their fossil fuel or hydrocarbon fuel component of exports, which are huge, as we well know. And if China reopening does lead to a hike in fuel prices, then probably in value terms, we're likely to see, more money in the Gulf, and sovereign wealth funds possibly having more to invest in ASEAN. But what about non-oil exports? UAE is trying to diversify away from oil. Saudi is as well. Is that where a lot of the opportunity may lie, the non-oil exports between Gulf and ASEAN?
So first, I think it's two ways, Michael. So yes, a lot of money comes into the Gulf due to the sale of hydrocarbon related product, but on the other hand, a lot of imports gets consumed and gets imported from Asia. And as we move forward, I think we will have to be, a balanced world will be created where manufacturing activities gets redistributed on the global front in order to create an equal platform. So, and this is where the opportunity lies, I think, for a lot of the Asian manufacturers and industrialists. I think there is a huge opportunity for them to be in the UAE, to bring their manufacturing activities here, not only to serve the local market, but also to serve the broader region out of the United Arab Emirates and the GCC in general. The infrastructure exists today, so we have excellent infrastructure that they can capitalize on. A lot of trade treaties are being signed between the Gulf region, the UAE, and the countries around us, which basically opens new market access. Again, when it comes to the manufacturing activities that we expect, obviously we don't expect everything to be suitable. We strongly believe that some of the industries that fits the UAE and the GCC operating environment will gradually take place in the United Arab Emirates. Finally, I just wanted to highlight that UAE and Dubai is a tested product for an indirect investment. Mm-hmm. So it's an excellent city to live in. It's a cosmopolitan city. The ecosystem is there. The judicial system is there. So the opportunity will be in manufacturing activities for the Asian countries to serve the local market and to serve the broader region out of the UAE.
Well, let's look again at e-commerce, and you talked about the growing middle class in ASEAN and in emerging Asia and how that is fueling the rapid growth in e-commerce and retail and the like. But what about opportunities for ASEAN e-commerce players in the Gulf? Are you looking to expand in the Gulf? And if so, is it the UAE? Is it Saudi? Because all have digital programs, great digital ambitions, young population. So is that an area that ASEAN's tech companies are looking at?
I mean, I think that just domestically, regionally, there's a lot of opportunity already within the ASEAN sector. I would say there are a few, basically, I also do make personal investments, angel investment startups and whatnot. And, the companies that are focusing specifically on whether that's, basically direct to consumer brands, they are thinking globally. They're looking at, UAE, they're looking at, basically expanding just manufacturing in Southeast Asia, but expanding, in the Middle East and as well as the rest of the world. And so that's more specific, let's say, to our sector. But in terms for us, for e-commerce in general, we do really just look at in terms of that, kind of geopolitical shift from China to Southeast Asia. But really interestingly, even capital, right, and financing in terms of, basically funds coming at China as they, looking at diversifying. It's very challenging because, when you do take, basically capital from Chinese funds, there is this kind of a little bit of stigma that comes with that, and having to choose, sides is becoming quite a bit challenging, from that as well. And also on the other side of it, when you think about, how competitive it is now in Southeast Asia, in terms of, global brands, think of Google, Facebook, but also think of, TikTok, JD, Alibaba. It's becoming very competitive in terms of, not only from an investment perspective, but even, when you look at, for example, JD, they just shut down their operations in Indonesia and Thailand from a B2C perspective, on marketplace, because it's incredibly competitive, having to compete with, all the other marketplaces. And so, it is just within our own backyard itself, incredibly, competitive, as, we're not only dealing with local, but also regional and global. But of course, there's, it's still huge opportunities in various different sectors. I mean, what I just covered earlier was primarily B2C. And that's, obviously incredibly competitive, but you're looking at, kind of the B2B e-commerce sector, which is, 2 to 3 times that of B2C, now becoming the new battleground of Southeast Asia. And so, there's, quite a lot happening in our own backyard already.
Michael, could I jump in on that?
Please, yes, of course. Yeah.
Thank you, because I'm very passionate about digital and technology. So just briefly, one possibly more natural path for collaboration on digital between UAE or Saudi startups and ASEAN startups might be what I would call like roaming relationships, or like roaming contracts, or correspondent banking, like relationships, right? So for example, in Southeast Asia and ASEAN, the leading ride-hailing app is Grab, right? Whereas Abdullah, I understand that in the UAE might, right, like the ride-hailing and food delivery. Now imagine if like ASEAN tourists coming to the Gulf, right, can use their Grab app, right? But really it's interconnected with Careem, right? Or tourists from the Gulf use their Careem app, but actually, it's interconnected with Grab. So in short, just briefly, since I come from a finance background, my analogy to that is like correspondent banking relationships. Obviously banks in the US can transfer money to banks in Southeast Asia and so on, right? And there's sort of a clearing and settlement, in the background. Or if you prefer a telecoms analogy, kind of like roaming agreements, where like the ride-hailing apps from the Middle East can roam, in Southeast Asia, because they have correspondent operating relationships with the local counterparts. Yeah, so I think that could be a very interesting way to go.
Very interesting, very interesting. Eric, I kind of come to you probably back on the macro picture a little more. The Gulf are developing capital markets, and they're trying to encourage more funds, more trading. Do you believe that will help underpin investment from ASEAN? Will that attract more money from Asia more widely, but ASEAN in particular? The growth of capital markets in the Gulf, how important is that in terms of this trade corridor?
It's certainly important. I wouldn't say it's absolutely necessary, but it just helps to round out the picture that we heard about earlier in the discussion about the existing infrastructure and the existing ecosystem here, which I think is increasingly viewed as very attractive. There is a saying in the region that historically investors only came to the region to raise capital, not to deploy capital.
Yeah.
And what I think we've seen over the last 3 to 4 years, and it's really accelerated since COVID, is a number of what I would call global allocators of capital actually setting up major offices and headquarters here, looking to deploy capital in the region. And I think that's a really sort of momentous step, because it means that for those parts of the world, and we're talking about ASEAN today, but it's relevant for other parts of the global economy as well, looking to establish a financial footprint here, looking to potentially use the region as a gateway for lots of other things, right? Whether it's access to Africa, whether it's access to other parts of emerging economies. I think capital markets being liquid here enhances the reputation and ability of the Gulf being a global center, not just a regionally focused one. So I think it just improves this narrative of two-way flow of capital,
Yes.
ideas, people that didn't exist before.
Okay, look, we've already got questions lined up from the audience, so this is a good time to bring them in. Denise Zhu from HSBC, I'm going to start with you. Denise.
Hi, thank you very much, Michael. So within HSBC, I'm located in Dubai. Within HSBC, I manage the Chinese customers, Hong Kong customers, inbound to MENA for the region. Recently, I've seen a lot of trend because of the shipping cost hike and geographic attention, and a lot of people asking me, what's the advantage of setting up the office in the MENA for those Asia investors? And my question is around, is there any way I can find a comparison of Asian production costs, production elements like electricity, land, labor on a landscape basis, Southeast Asia, China, and Middle East? Of course, Middle East, it's pretty much GCC is pretty much the same, but other than that, different countries. But in a nutshell, GCC countries and also tax, that would be great. That's what I've been asked a lot from my customers.
So there's obviously a clear amount of interest in that, and so there's a lack of data or a lack of comparative data. Abdullah, I know there's a lot happening in the UAE and in Dubai in particular, under the merged economy and tourism ministry, to try to encourage businesses to relocate from Asia into the Gulf. Abdullah, is that accelerating? Is there a real push to get Asian investors, Asian companies to base themselves in the region as part of this process? And do you see that activity happening?
So I wouldn't say it's a reallocation, Michael. I would say people are expanding their businesses. People are de-risking their supply chain setup. They want to be closer to market. They want to be able to serve the market with a shorter lead time. The increase in ocean freight rate that we have seen over the past couple of years created an impact on people's ability to export certain commodities, which resulted in a change in sourcing pattern. Now, there is a permanent change in sourcing pattern, and there is a temporary change in sourcing pattern. So there are certain commodities which started being produced here from Asian countries. They are being exported out of the UAE as well, especially a product that has raw material, especially a product that requires specific raw material that exists here. So, for example, the polymers, certain chemicals, aluminum, steel-related products. So a lot of these products now gets manufactured in the UAE and gets exported to the hinterland that is being served by Jebel Ali. On the other hand, there is some commodities, I would say, where China, for example, has a competitive edge on. And due to the temporal disruption that was created by COVID back in the day, the sourcing pattern have changed. We're seeing that coming back because China has great competitive advantage in producing those commodities. So to answer your question, I would say it is accelerating. We've seen a lot of businesses, especially in the manufacturing space, coming to the UAE. We've seen a lot of people, a lot of investors coming to the UAE to capitalize on the trade agreements that exist today, which is the GAFTA trade agreement, the Arab League trade agreement, and the GCC unified custom protocol. And with the UAE signing more and more trade agreements, it will become even better for certain producers to use this platform in order to serve India subcon, in order to serve the Levant country, GCC, East Africa, and North Africa as well.
Tom, I see you nodding throughout that from the ASEAN perspective. Do you see that shift, rather than a shift, of reallocation or an establishment of new outposts in the Gulf and Middle East region more broadly?
Yeah, Michael, I think I want to also address Denise's question directly with respect to wage levels, labor costs, electricity rates, and the like. Denise, if I may, I like to suggest maybe you can communicate with your clients to take a more entrepreneurial perspective, where, of course, all those things matter, right? Like electricity rates matter, wage levels matter, but I would argue comparative advantage matters even more, right? So there's certain industries where I think many Gulf states are really developing centers for excellence. Yeah. So it's going to attract talent as well as capital and activity. Just to give a very obvious example, I think we can all recognize that the UAE is already a aviation superpower, right? And I believe they're now leveraging that into the aerospace industry and into the supporting services called MRO, right? Maintenance, repair, overhaul. And so, given the massive size of these aviation fleets based in the UAE, and I believe the Qataris and the Saudis want to chase after, the Emiratis. But I think, aviation, for example, there's no question in my mind that the Gulf states are going to be a major aviation and aerospace and MRO center, right? And everything from China, from ASEAN, we've got to get in on that. We've got to leverage those scale economies, those efficiencies, that center for excellence. And that's just one example here. I can think of many more sort of emerging centers for excellence in the Gulf states.
Tom, that's great. Thanks very much. A reminder, if you want to ask questions, just put your virtual hand in the air and I'll come to you. Next question now from Mariana Jimenez from Prudential. Mariana.
Thank you, everyone. Thank you, Michael. I just want to highlight that it's a very good thing that you have provided a very positive outlook for the Gulf-ASEAN trade and investment relationship. So thank you for that. I do have, however, a question, and it's it's around bringing China back in. You very clearly said that China-ASEAN relationships were complementary in terms of the economic side of things. But you also mentioned that geopolitical issues and concerns remain. But however, ASEAN, one of the positive things is that they have this neutral positioning. However, I would like to ask, what do you see as the key challenges when we talk about geopolitics in the region? And specifically, the question is, to what extent do you think ASEAN countries will be able to move away from China's clout politically? Also, I don't know how, if potentially, and this is a massive if, of course, but China-US tensions, kind of increase. How would, a political alignment between, China, US, Gulf, ASEAN, how would that basically impact trade and investments in the region?
Yeah.
And
nice easy question for you, Tom, from Mariana. Nice easy.
Sorry.
No, great question. Great question,
Mariana,
and a very important question actually, because
exactly.
yeah.
I was going to say that. I was going to echo that sentiment, Michael. I think, Mariana, you've touched on, the issue of the decade, right? Which is really the geopolitics, especially between China and the USA, right? Now, let me start by highlighting again that I feel this is something that the Gulf states and ASEAN share, which is neutrality, right? Like, for various reasons, I think the Gulf states and ASEAN are two regions that sort of have the luxury of not having to choose sides, at least for a long time to come. Yeah, I think China and the US are kind of fighting over the Gulf states. China and the US are kind of fighting over ASEAN, right? And I'll get to the broader context shortly, but as the American phrase goes, that sort of puts the Gulf states in the catbird seat. It puts ASEAN in kind of the catbird seat, right? It's nice to be fought over. Now, of course, that all stops being fun the minute war breaks out. So, to your question, what is the key geopolitical challenge, not only of the region but the world? Frankly, it's probably the risk of war in Taiwan, right? And that looms so large in my mind that I almost divide the future into two futures, right? Into kind of two timelines. One is a world without that war, and one is a world with that war. Now, in the meantime, all of us have to collaborate and work hard to deter such an outcome, right? Deter the advent of war. But secondly, and this is a bit more fringe at the moment, but to me, the war in Ukraine proves that it is possible to have a continuation of trade, a continuation of investment, even, and to some degree tourism, even in the middle of war, right? So I'm developing this concept called war and trade, a bit of a tongue-in-cheek pun on war and peace, which is, even in the devastating situation where war broke out, how can we keep trade going? Like, how can we keep investment and even tourism going, right? And I believe it is possible, actually, in the 21st century to do that. There's Ukrainian tourists in Bali right now, partying with Russian tourists in Bali together, right? You would never see that in the 20th century, during World War II. There's no way like German tourists are partying, with British tourists in New York, for example, right? But even as war afflicted the Black Sea, for example, the United Nations together with NATO and countries like Turkey were able to restore the flow of grains and fertilizers from Ukraine and Russia back to world markets, thereby cooling prices for things like wheat, vegetable oils, and fertilizer. So sorry, this is a broad brush, but hope that helps give a bit of flavor.
But I guess, Tom, that the tensions between China and the US, and let's all hope that they stabilize and still will drive trade or a closer relationship between Gulf and ASEAN, because as you said, and as I said earlier, their independence means in fact, that they are they're neutral on this. So okay,
that's right.
Next,
so
yeah,
Gulf and ASEAN and India and ASEAN actually. So the other huge axis is actually India and ASEAN, and I understand that the Gulf region and India are also booming. So
interesting. Next question, Ian. Ian.
Hi, everyone. I just would like to introduce myself a little bit. I come from an organization which we produce industrial belts. I'm currently the head of finance for APAC. Just want to respond back a little bit to Mariana about China, because I'm located in Shanghai. Just to let you know that my personal speculation that you will see China diplomatic approach will be very softener, and because of a couple of reasons. One is that if you go across China, across all the 31 provinces, you'll start to see that many of those government offices, they are actually, they should declare bankruptcy, put it that way. They are short of money, and right now they're actually encouraging a lot of investment. Yep. And that this internal issue will encourage the people or the Chinese government to change a little bit on their approach. Yep. And therefore, I just want to respond back. My speculation is that Taiwan issue is that will be there, but the thing is that I don't think it will go that drastic. Yep, that's point one. My questions to these guests and audiences is that my personal experience is that we always see that how we encourage trade, one of the key things is actually the settlement, or you call it the monetary policies. How do you guys see that the digital like Bitcoin and so on will help to enable? And I'm originally from Malaysia. I don't see that a lot of adoption by those ASEAN countries in terms of digital coins and so on. How do you guys see that will enable a lot in terms of promoting all the transactions and so on?
Great. Can I start with Paul on that, because you're working in the e-commerce space and the digital currencies from central banks? That's a few years ago people were saying this is an idea. It's now becoming a reality. Paul, as you're working in the e-commerce space, where do you see digital currencies going, and is that going to drive trade?
I mean, absolutely. I think even when you see especially in Indonesia with the adoption of the digital wallets, I think GoCheck or now GoTo back then really drove that, and also even in Thailand, where you look at basically the government playing a really key role in making sure that adoption of digital and finance and payments with their own digital wallet as well. It's so we do see that it's much easier to do business with this cross border, less so on I would say on cryptocurrency. But probably, I would maybe like to also add that, when you think about, kind of just to go back to that US, China, what I find interesting here is that, we look at it as also the cloud wars, right? So when you think about, basically Ali Cloud, Tencent Cloud versus, Microsoft Azure or AWS, it's really interesting, like, just looking at, because, cloud actually in some ways powers a lot of the whole, internet economy. And we see a bit of that tech war that's happening, in terms of, we use both to kind of leverage each of them. And we see this interesting kind of US, China, tension. Actually, I look at it as almost, kind of a child with divorced parents, where you get two birthdays, you get to have two Christmases, right? And this kind of a fight for attention, is actually in some ways benefiting kind of ASEAN. But I think as a whole, and you can also think about whether it's MENA or it's ASEAN, but the role that I think also we would play in terms of being able to really help actually be a mediator of any of those tensions, right? Because we're both trading power partners for both.
Yes.
And that kind of strengthen that regional cooperation to for Asia Pacific as a trade as a whole, and rather than kind of individual countries. But I do think that both MENA and ASEAN can play a really impactful role to avoid those things that Tom was saying earlier.
Yeah, I would imagine that the greater the strength of the ties economically, and the greater the trade, the more powerful the trade bloc that becomes, and the more useful it is in terms of stability globally. We're just about out of time. Rick, I want to come to you for a final question. We've talked about various sectors, and you mentioned a few examples of investments. If you had to rate the sort of top three sectors for Gulf investment into ASEAN, I assume that e-commerce would be near the top, but what else would you be looking at?
I think anything that revolves around digitization of business will be a top priority for us. Not so much investment in deep tech, et cetera, but the application of existing technologies to make companies more competitive, to allow them to scale more rapidly, to be more competitive. I think that is a broad spectrum approach. We're doing it in healthcare. So, for example, our forays into India and Thailand, we're bringing genetic testing, genetic labs along with that. In terms of healthcare, we have revenue cycle management investments where we're bringing AI and end-to-end platforms that are revolutionizing how the working capital cycle works, et cetera. So I think digitization across a range of businesses will be great opportunities for the Gulf to go into Asia and respectively the other way. We
Mm.
also like sustainability.
Yes.
I have a particular passion. I've been on the board of this water investment for 14 years. And we see in our sustainability, we think about it not too broad because you can't be an expert in everything, but we think about water, we think about alternative energy, and we think about agri-tech. And we're a big fan of agri-tech. We haven't put our foot in the water yet, but we do think that the UAE, for example, imports 85% of what we consume here. So being able to localize production, develop techniques and control climate warehouse, and then export them to the ASEAN countries. So a very prominent firm here that is doing that in the UAE, Kuwait, and in Saudi Arabia has now signed an MOU to develop a controlled climate growing facility in Singapore and is negotiating in Malaysia. So we think sustainability is going to be a theme that runs through. And of course, everybody's noted that the carbon exports coming from the Middle East are a major driver of cooperation between the two areas. So I think health tech, I think any digitization, and obviously e-commerce and fintech. We have a fintech platform. One of the great advantages is electrons don't tend to be too territorial. You can scale and you can move across boundaries very quickly without having to set up plants and do physical investment. And there are lots of smart guys out there like Paul who are figuring out how to do that. And we just want to find the coattails of the guys that are doing that and help them go along with it. So I think all those sectors are going to be terrific opportunities, both for ASEAN coming into the Gulf and the Gulf going the other direction.
Thank you very much. Look, I'm afraid we are out of time. What a fascinating conversation. And it's clear from all that's been said that there are immense opportunities between the Gulf and ASEAN, that trading corridor, and something we at Asia House are going to follow very closely, and clearly Gulf Capital and everybody here who are on this call are looking at as well. So just remains for me to say thank you very much to our speakers, Tom Limbong, Abdullah Al-Hashmi, Eric Robertson, Paul Shrivarakel, and Richard Dallas. Thanks to Gulf Capital for working with us on this fascinating experience, and hope we'll do more on it. Take good care, everyone. Thanks for joining us. We've had a truly global audience today. Wonderful of you to take part. I hope you've enjoyed it. And so it just remains for me to say, take care, stay well, and bye for now.